Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Give me just a moment here. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also, Bookmap Discord. There's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of this presentation as well as the topics of the channel I'll go over in just a moment. So, Bookmap Discord is free and available to everyone, whether you're a Bookmap subscriber or not. I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. Excuse me, when I talk about setups today, I will be talking about setups in an underlying asset. And for example, S&P 500 setups can be taken with futures, shares of SPY options, or SPX options, or even ES options. So a number of ways to trade these setups. Again, setups based on an analysis of the options market, order flow, and hedging flow. Setups can be taken, again, any number of ways. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. So please feel free to post, and I'll do my best to answer. My agenda for today: what I want to cover, news items, economic data for today, events for today, then a brief preview of next week, then I'll go through my positional analysis for today, then I'll review some setups from this morning, and then we'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, economic data, events for today. So the big event was the options expiration. This is a large expiration. Let's just take a look at that. Very large expiration, especially for SPX. This is the expiration concentration chart. So for SPX especially, the monthly options expirations every quarter are the largest expirations. That's where institutions place their trades. So this chart is showing expiration concentration of delta per expiration. So the vertical axis showing delta notional. This is market makers delta notional at a variety of expirations. This is today. This is the September expiration. The orange bar is showing call delta. The put bar, the blue bar is showing put delta. orange bar, call delta, blue bar, put delta. So clearly now, today, we've taken a look at this every day this week, and clearly by today, there's a clear domination of calls into this expiration. So all of the calls, SPX calls, so some have already expired. For SPX, there's an AM expiration. That is the typical monthly expiration, the AM expiration, those options expired at the open today. And then there's also the weeklies, the SPX weeklies that expire at the end of the day. So a lot of those calls have already, well, the calls for the AM out of the money calls, that calls for the AM settlement have already expired, and then a lot of calls will expire with the afternoon settlement, the PM settlement, the weekly. All right, so all of that delta notional goes away at the end of the day. All right, so that is the expiration concentration for SPX. We'll just take a quick look at SPY. So here's SPY, very heavily call dominated. That's the large bar there, the large orange bar, call domination. And the same for QQQ, very heavily call dominated. So a lot of the calls are expiring today, puts as well, but mostly calls. All right, next week, just a note on my schedule, I will not be streaming on Monday and Tuesday. So again, next week I will not be streaming on Monday and Tuesday, but I will be back for Wednesday. That is the FOMC meeting and announcement. So I will be back on Wednesday for the FOMC meeting. The announcement will come at 2 p.m. Wednesday afternoon, midway through my my webinar on Wednesday. And again, I'll be back on Wednesday. All right, so that is the news. Let's take a look at positional analysis now and thesis development. So first of all, this is the ES futures. I'm going to start with the S&P 500 ES futures in Bookmap. And before I take a closer look at this chart, I'm going to take a look at a larger time frame. This is SPX in a 30-day 1-hour chart. This is the August expiration. That's when this rally began, the August 18th options expiration. And as you recall, that was very negative gamma, put dominated, slightly put dominated rally. Those puts expired, and market makers could buy back short futures, and as price continued to increase, finally shifted from a negative gamma position to positive gamma, back to negative, and then back to positive today, and certainly will be negative again tomorrow, or next week on Monday most likely. All right, so gamma notional did shift to positive today. All right, so that is the August expiration. Now, just the opposite is occurring for the September expiration. Heavily call dominated, slightly positive gamma. All those calls are expiring that are supporting the market, and that should lead to a wider trading range, typically a pullback after a call dominated positive gamma expiration. I've been talking about this all week. All right, so let me point out some levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. And SPX did test the upper weekly expected move yesterday, and now is trading well below that, right in the middle of the range between the upper and lower weekly expected move. That information is just based on the options market. It's available in should be available on any trading platform with an options chain for SPX. The dashed blue lines are showing and they're covered by red lines, so it may be difficult to see, but that is the lower and upper daily expected move. SPX is trading well below the lower daily expected move. All right, let me point out some Spotgamma levels now. These are proprietary levels available to Spotgamma subscribers based on gamma-weighted open interest. And note the very tight cluster of levels here. They're shown by the red lines. So first of all, the 4,500 level, that is kind of the center of the universe right now. We'll take a look at that in just a moment. That is the center of the universe for SPX. Most likely will not be next week, or some of that gamma will definitely be diminished next week. But anyway, the 4,500 level is the absolute gamma strike and also the put wall. The put wall is a strike with the largest net negative gamma that can be expected to act as support, and it's not doing its job today. SPX is trading well below the put wall. The absolute gamma strike is the strike with the largest absolute negative and positive gamma. Then just above that, the 4510 level. Actually, let me zoom in on this chart just a little bit. Maybe easier to see. Here we go. So zoomed in on this chart. Excuse me. All right, so here's the 4,500 level again. Absolute gamma strike and put wall. Just above that is the volatility trigger. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment like SPX is trading now, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And then just above that, at the 45.25 level, is the call wall. That's a strike with the largest net positive gamma that can be expected to act as resistance. So that's a very, very narrow range between the put wall and call wall. Put wall at 4,500 and the call wall at 45.25. And just recently, a week ago, the put wall was at 4,300 and the call wall at 4,600. So a 300-point range a week ago between the floor and the ceiling, the put wall and the call wall, and as opposed to a 25-point range today between the floor and the ceiling. All right, let's take a look at another SPX chart just to get a closer look at the levels in play for today. So SPX trading below the, below the upper weekly expected move. It was trading it yesterday. It did trade above that level. So trading below the upper weekly expected move. That's also right next to the 4510 volatility trigger. Also trading below the put wall and the lower daily expected move. All right, let me check for questions. All right, so N7 lead farmer ask if the put wall is at 4,500 and we cross below it in this trading day, does that there imply there's so many orders sitting that we pass through it without all of them getting filled? And yes, we did. The SPX, not we, SPX, opened below the 4,500 level. And I don't know if there were orders at that level or not. I do know about open interest and volume at that level, but I don't know about orders at that level. So we'll take a look at the open interest information in just a moment. So actually, let's do that now. All right, so we know SPX, the low of the day, 44.47. We'll remember that when we look at the Vanna model. SPX below the volatility trigger, the put wall, and the lower daily expected move. All right, let's take a look at a couple of things here. I'm going to go back to this chart right here. This is the absolute gamma for SPX, and this may be this number here may be difficult to see, but this is very obvious. The 4,500 strike, as I said, is the kind of the center of the universe today for SPX. That is the put wall as well as the absolute gamma strike. All right, let's take a look at something in Thinkorswim here. This is the options expiration for this afternoon. So for some reason, Thinkorswim is not showing the AM settlement that already expired. So let me just take a look at something real quick. Give me just a moment. All right, so I'm looking at just looking at another screen here that does have the AM settlement. So there was definitely some. There were definitely calls and puts that expired today. So this is what is that already expired today, and this is what is expiring. This is what is expiring today. Calls. Whoops, that's volume. Let me go to open interest. So there was a large amount of open interest that expired. A larger amount of open interest, mostly over 10,000 at each strike, that expired today. Here's open interest. This is expiring today. Calls and puts that expired this afternoon. Here's the 4,500 level. All right, so that's what's expiring today. All right, so again, in 7 lead farmer, I don't know about orders at that level. You know, that's going to change during the day. All right, let's take a look at Bookmap now. So Bookmap, I have my cloud notes. I'm showing SPX levels. There's the 4,500 level, absolute gamma strike, put wall. I also have SPY levels on here. Here's the SPY. Well, let's see, where's the 450 above. Here's the SPY. For example, the SPY 449 volatility trigger. Here is the SPX 4450 level, and I I set my ES to SPX difference this morning at 50. It looks like it is trading at 48 now. So this 44.50 level should be just slightly lower. Also note there the ES to SPY ratio increased quite a bit. There was a dividend for SPY today, so that ES to SPY ratio changed quite a bit from yesterday. All right, let me check for questions. All right, so in 7 lead farmer, ask if the put wall indicates open interest or a large number of resting orders. It indicates gamma weighted open interest. So the open interest for today, so gamma is greatest at the money at expiration. So the gamma today has more importance than the gamma next week. Gamma is greatest at the money at expiration. So the put wall is simply based on open interest, not open orders or resting orders. We'll see resting orders in Bookmap. That's what the current order book, and then the heat map in Bookmap shows so current order book is the current resting orders, and then the heat map shows the history of resting orders. All right, Bala, I'm not sure what you're asking about. Closing your put position, CBRE, not familiar with that, and I would any order. I don't know about the liquidity of that instrument. I would start at the mid. All right, so N7 lead farmer. I hope that answers your question. All the Spotgamma levels are based on gamma weighted open interest. All right, so here's the S&P 500. It looks like maybe the 44.50 level is acting as support. And we'll see. All right, so a lot of levels in play for today. Big move lower. All right, let's take a look at, all right, let me get to shifts in levels now before I forget. So for SPX, all the key daily levels did shift higher. Volatility trigger, put wall, call wall, absolute gamma strike, all shifted higher. On the surface, when you that is bullish. There are other factors in play today. All right. For SPY, and again, we're looking at SPY on this chart as well. Keeping in mind the ratio, the ES to SPY ratio did change pretty significantly today based on the SPY dividend. So I'm looking at SPY charts, and for SPY, the volatility trigger, call wall, and absolute gamma strike all shifted higher as well. So bullish shifts higher in the S&P 500, and again also a narrowing of the range. The volatility trigger for SPY at 449, absolute gamma strike at 450, and the call wall at 451. All right, let's take a look at NASDAQ. NASDAQ, very similar pattern. Sharp move lower today. Let's take a look at QQQ. Just to isolate the QQQ levels in play for today. Note QQQ is trading below its put wall. Also well below the volatility trigger that is at 378. And it looks like 370 may be acting as support. And that is a combo level. Just a combo level just above that, also an L4 level. acting as support almost to the tick so far. And let's take a look at NDX. Zoom in on today. So for NDX, all the key daily levels, volatility, trigger, put wall, call wall, 3 of them shifted higher. So hat trick for NDX, just like SPY. And note the volatility, trigger, put wall, and absolute gamma strike are all at 15,500. That's up here. And the call wall is just above that at 15,550. And now it looks like this combo level, which is right, the same QQQ combo level that we just looked at 15,180, may be acting as support. All right, so shifts in levels. I mentioned the hat trick for NDX, and then for QQQ, the volatility, trigger, and put wall shifted higher. So here's the 375 put wall for QQQ, and the NASDAQ trading well below that, down to 370. All right, let me check for questions. All right, so N7 lead farmer asks, say, SPX, I assume, traded all the way back to 4,500 before 3 p.m. today. What edge does knowing about the put wall give us? I assume that's what you're asking. Well, the thing that we can so today is a very complicated day because it's a large expiration. Normally, the statistics, Spotgamma statistics, show that I believe positive forward 1-day and 5-day returns after a breach of the put wall for the S&P 500. All right, so that's that's really the only way that I can answer that question. And Porter Cooper asked, how do I see OPEX with its heavy call weighting affecting price into the close? I think it just depends on what options traders are doing. So we'll take a look at setups in just a moment. And if traders are continuing to take negative delta positions, then I don't see any move higher into the close. We'll take a look. So let's go back to the S&P 500. So we'll get to that in a few minutes. All right. So N7 lead farmer asked, says, wonderful. That's what I'm looking for. How does one find the stats on something like that? I don't know if it is those stats are available to everyone or not. Go to the free resources on the Spotgamma website and see if you can search for it there. I know there have been YouTube videos. Spotgamma has presented YouTube videos on this information. I don't know if they're publicly available or just available to subscribers. That information, that should be available to everyone, but you just may have to search for it. All right, you're welcome, lead farmer. All right, so Porter Cooper, yeah, if price continues to move lower, all of those out of the money calls are quickly losing value due to charm. That is the change in delta with the change as time passes. So the deltas of every call out of the money is quickly approaching zero as options expiration approaches this afternoon. All right, let's take a look at some other information now. So we know that this is a call dominated expiration for SPX, SPY, QQQ. Let's take a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day for SPX, SPY, NDX, and QQQ. Note for SPX, it is slightly positive today. For SPY, still negative. And also for QQQ, still negative. In a positive gamma environment, that means that for an index, traders are short calls, market makers are long calls, and they have to trade against price to hedge their delta exposure. On the other hand, like SPY, negative gamma environment, that means traders are long puts, market makers are short puts, and they have to sell futures as price decreases. As price decreases, they have to sell futures to hedge their delta exposure. So these levels did change from yesterday. For SPX, gamma notional became positive today, slightly positive from slightly negative yesterday. And for SPY, it actually shifted more negative. And for QQQ, shifted less negative. So mixed shifts in the gamma notionals. Let's take a look at one other thing here before we get to setups. This is so we've looked at the absolute gamma strike for SPX, concentration at 4,500, call dominated expiration. Let's take a look at the Vanna model now. So what this chart is showing is market makers delta notional. There were a lot of questions about this yesterday. I'll take a couple of minutes to go over this. So this is showing market makers delta notional on the vertical axis and how that changes with changes in price on the horizontal axis. So there's nothing more to this chart than showing market makers delta notional and how it changes with changes in price first only, price only, shown by the light gray line, and then this purple line shows how market makers delta notional changes with changes in price and implied volatility. And that change in delta notional with a change in implied volatility is the Vanna effect, hence the name of this chart. Vanna is a second order Greek. So the thing to keep in mind is market makers always want to remain delta neutral. So let's take a look at some prices for SPX. So we know we'll find the 4,500 level. Actually, SPX opened just below that, right around 44.98. So about here, we know that market makers' position on the gamma curve at the beginning of the day is neutral. We assume that they are fully hedged at the beginning of the day, so they're delta neutral. And then this is showing how they may have to hedge their delta exposure with changes in price and implied volatility. That's all it's showing, is how their delta notional changes. So this is the opening right around here. And we looked at last time we looked at SPX, that low of the day was around 44.47. So what we know is as price dropped from 44.98 to 44.47, we know that this curve is increasing to the left. This is showing that market makers delta notional increased from here to here. So their delta notional increased as price dropped and implied volatility increases. That means they have to sell futures to hedge their delta exposure. All right, so that's all this means. All right, I'm checking for questions. All right, Truman asks, will the way I interpret the SPX Vanna chart change when the founder's note gamma notional for SPX is negative versus if the founder's note gamma notional is positive? Not really. So it will impact. Again, the market maker's position on the gamma curve at the beginning of the day is going to be neutral. That's the way they operate. It is, so we assume that it is neutral at the beginning of the day, and that's always a factor. Looking at the gamma notional at the beginning of the day, knowing it's slightly positive for SPX, but I'm looking at the position of price on this curve, and so I know the opening price, the low of the day, and this is what has occurred today. Market maker's gamma notional shown in the founder's note is at the beginning of the day. This is what is happening right now. All right, so Porter asks or says, I know market makers like to stay neutral, but I've heard some former market makers say how sometimes they will take a direction based off flows in inventory if they see it going their way. That I don't know. I'm just assuming they want to remain delta neutral. They're bona fide hedgers. Their only job is to make markets and manage their risk. So that's my assumption. All right, Take Profit says very clear. Thank you. Truman, market for an index, traders are long puts and short calls. And market makers take the opposite side of that, so they are short puts and long calls. So Truman, I would say just don't overcomplicate this. All right, so I need to move on here. So that's the Vanna model. Let's just take a look at. So we know price has decreased during the day. That's obvious from this chart. Let's just take a look at one other thing real quick. So here's VIX for the day as a proxy for implied volatility, and we know that VIX has increased all day. Price drops, implied volatility increases. Going back to the Vanna model, we know that market makers' delta notional has been increasing, and they need to sell futures to hedge their delta exposure. All right, so sorry I spent a long time on this, but it's a very complicated day, a lot to cover. So my thesis for the day, there were two, let me get to the directional bias. There were two, number one, number two. So number one was just based on the levels, the shift higher in levels for SPX, SPY, NDX, QQQ, that is bullish. On the other hand, in a call-dominated positive gamma expiration for SPX, looking at that call gamma unwind to unwind, that is bearish. And that is certainly what is playing out today. So thesis number two is playing out today. All right, let's take a look at some setups. All right, so again, Vanna model, price decreasing, implied volatility increases, market makers' delta notional is increasing. They have to sell futures to hedge their delta exposure. So it's that simple. All right, let's take a look at some setups now. I'm going to start with the S&P 500. And I've already separated out puts and calls on this chart. Just get straight to the chase here. So what this chart is showing, this is the hero signal. Hedging, impact, real-time options. There are three lines on this chart. First of all, the white line is showing price for SPX. And the blue line is showing puts. This is showing options trades and puts and market maker hedging activity. The orange line is showing options trades and calls, market maker hedging activity. And this is all for a combined signal for SPX, SPY, XSP, and ES futures. So if you trade any form of the S&P 500, whether it's ES futures, SPY shares, SPY options, SPX options, this is really the signal that you want to take a look at. All right, so let's zoom in on this chart. Scroll just a bit. So right here, this is the cash open at 9:30 a.m. Eastern Time. So the blue line, when the blue line is falling, this is in terms of delta. So this is traders buying puts, taking negative delta positions. That's also shown by the negative notional value here, minus 3.96 billion. And they have been buying calls, but that level, that activity is pretty level. But it is, this notional value is positive, around 550 million positive. So the put buyers are much more aggressive today. And as you can clearly see from this chart, put buyers, as well as this call gamma unwind, these calls losing value due to charm, are contributing to the move lower. All right, so let's go take a look at Bookmap at the S&P 500, and clearly, you know, your only job today, if you're trading during the day, was to look for an entry point for a short, looking for any pullback to go short. Pull back to the 4,500 level, 44.95, back to the lower daily expected move. Some consolidation around the 446 level. Then the 445 level. Trend break. Aggressive sellers come in, shown by the magenta volume dots. Let's take a look at the subchart. Note that this is, the yellow line is showing stop orders. So this move down is also being fueled by sell stop orders, shown by the small red dots there. That's 2,845 stop orders, sell stop orders, 2,150. Cumulative volume delta also negative. That's shown by the dark blue to pink line. And then initially, large traders were buying the move down. That's shown by the rising light blue line. That's pretty typical of larger traders. Buying weakness, selling strength. And finally, they looks like they threw in the towel here and started selling. All right, so bearish order flow and hedging flow. Traders buying puts. When traders buy puts, market makers sell the puts, and they have to sell futures to hedge their delta exposure. All right, so the S&P 500 again testing that SPX 4450 level. All right, let's take a look at NASDAQ. I'm going to go to Hero for NASDAQ. I've got two things I want to take a look at. First of all, this is a combined signal for NDX and QQQ. And this chart is showing that traders are buying calls or buying puts, shown by the negative notional value in the falling blue line. They're also buying calls. They started buying calls pretty aggressively. Looks like around 11:45 or 12 noon Eastern. So far, not getting their way. Let's take a look at QQQ. A little bit more clear for QQQ. Traders buying puts and buying calls. Call buying shown by the rising orange line, positive notional value. Put buying shown by the falling blue line, the negative notional value. So options traders not having as much of an impact on the NASDAQ as the S&P 500. But the order flow for NASDAQ is bearish. Large traders selling with iceberg orders shown by the falling light blue line. Also sell stop orders fueling move lower. And cumulative volume delta is positive for the day. That's shown by the rising pink or magenta to dark blue line. So a little bit of an easier read today in the S&P 500, I thought, ES. All right, let's take a look at some stocks. So I'm going to start off with something that I talked about yesterday, is the call gamma unwind. Let's just change this back to total signal. So what I'm going to do is take a look at my watch list here. This is Spotgamma Equity Hub, and I've selected my watch list here. Mostly large cap tech stocks. These are the stocks that I follow and trade. And I have ranked them by next expiry gamma percent. So this is the amount of gamma that is expiring today for these stocks, and I know it's today because this top gamma expiry, this is all 9/15, this is all today. And according to Spotgamma, any number above 30 is significant. So I'm going to start this with NVIDIA. I looked at Google earlier today. Not much to see there, at least when I looked at it a little while ago. So I'm going to start with NVIDIA. 46.76 gamma expiring today. This composite view chart is showing that there is some call gamma shown by the green shading that's above the or call domination above the 475 strike. All right, so we're going to start with NVIDIA. Let's go to NVIDIA here. Zoom in on this chart. Traders, just 10 minutes after the open, start taking negative delta positions. Let's take a closer look and see what they're doing. So they are buying puts and selling calls. Right now, notional values for both are negative and about the same amount. So we know that calls, all the calls are expiring today, out of the money calls especially, quickly losing value due to charm. The change in delta as time passes, expiration approaches, their delta is quickly approaching zero. Traders are also selling calls. So when traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. Then when those calls lose value as expiration approaches and traders sell calls, they can sell their long stock hedges. So that is what's happening in NVIDIA today. Let's go take a look at Bookmap. Go to NVIDIA. And nice downtrend in NVIDIA. Call gamma unwind. Also traders buying puts, selling calls. Market makers definitely selling stock to maintain their delta exposure, their neutral delta exposure. All right, Hugo asked, where do I see the order flow? Right here in Bookmap. So Bookmap is what I use to look at the order flow. If you're not familiar with Bookmap, I suggest you go to the bookmap.com website, look for the Learning Center. There's great information there that's free and open to everyone. Just very briefly, this is the current order book showing limit, sell, and buy orders. The heat map is showing the history of the limit orders. And a dark shading there indicates there's a larger number of orders. You can see that 20,000 limit sell orders there. The volume dots are showing market orders. I have delta for the volume dots, so the volume dots are showing buy minus sell. Green dots indicating more buyers than sellers. Magenta dots indicating more sellers than buyers. So Hugo, that's where I see order flow. That's what I'm looking at on this chart. Pretty simple for stocks. All right, so that's NVIDIA. Let's go take a look at the next one on the list. Back to the list in Equity Hub. The next is Netflix. I do not have Netflix in Bookmap, so we'll just take a look at it in Hero. Let's go to Netflix. Very similar. Traders are buying puts and selling calls, and market makers are selling stock to maintain their delta exposure. Right, the next, I'm going to skip IWM. Let's go to Tesla. Green shading showing call domination above the 280 strike. That is the call wall. That's also the key gamma strike. Let's take a look at Tesla. And Tesla was a little bullish earlier today. So far today, traders are looking at these numbers here, both positive. So net for the day, they are buying calls and selling puts. So not so much of a call gamma unwind for Tesla. When traders buy calls, you're not really expecting a call gamma unwind, although it may be starting around 12:45, 1 o'clock. Let's go take a look in Bookmap. So we see starting around 12:45 or 1 o'clock, traders started selling calls and buying puts. Go to Bookmap. Let's go to Tesla. Oops. All right, Tesla has a very strong correlation typically between options trades, hedging flow, and price action. So we know most recently traders started taking negative delta positions. And now price is responding lower right around 1 o'clock, 12:45 to 1 o'clock. All right, let me check for questions. All right, Truman asked, do you rank the stocks you're interested in an unwind just by the amount of gamma expiration, or do you use the amount of call gamma versus put gamma with that decision? I just look at the percent gamma expiring, just like I showed. So I'm, again, ranking my watch list in Equity Hub. Here by next expiry gamma percent. All right, so I'm not sure what else you may be looking at. This is, over here, this is volume, call volume versus put volume. So I'm looking at this number right here. Next expiry gamma percent. Make sure it's today. I'm going to skip over Amazon, go to AMD now. All right, so Truman, I just talked about that. I don't know if you're talking about, this is volume, not gamma expiring. Next expiry, call volume, put volume. I'm more concerned with the gamma expiring. So again, this is what I'm doing. All right, let's take a look at AMD. So this is showing no, this is showing all put domination, shown by the red shading. So let's go take a look at Hero and see what traders are doing. That doesn't mean there are no calls that are expiring. All right, let's go to AMD. Traders are buying puts and selling calls. Let's go take a look at Bookmap. And another nice downtrend in AMD. Traders buying puts, selling calls. Market makers taking the opposite side of that trade, and they have to sell AMD stock to hedge their delta exposure. I've got one more. Take a look at Meta. So same story, traders are selling calls, buying puts. So shown by the falling orange and blue lines, also the negative delta notional value here. Let's go take a look at Bookmap. There's Meta, another great downtrend. And let's go back and take a look at Hero again. All right, so for Meta, 310 is the key gamma strike. I was just checking to see if there was any, if 300 was a gamma level, but no, the put wall is down at 295. 310 key gamma strike. Looks like around that level. That was around the opening level. Acted as resistance. Let's go back to Bookmap. There's the 310 level. Key gamma strike. And Meta slice right through that. Put wall at 295. So Porter asked, the main expiration is after RTH close, correct? So that depends on what you're talking about. For SPX, I think the main expiration was this morning, the AM settlement. That is typically the larger institutions will place their longer term trades in the monthly expirations, especially the monthly expirations on the quarters, the March, June, September, and December. So that was the largest expiration for SPX, and then everything else, SPY, QQQ, and stocks, the expiration is this afternoon at the close. Most stocks close at 4 p.m. Eastern time. There is a list of stocks, SPY and QQQ on that list that expire at 4:15 today. All right, so the main expiration again for most instruments is at the close today, but the options expiration for SPX, the AM settlement was the most important settlement for SPX. So that has already taken place. All right, let's take one class look at the S&P 500. So it looks like that 4450 level, around that level. Remember, I'm off a couple of points here. ES minus SPX should be at 4498. So that's right around where SPX is trading now. Let's just take a look at the SPX chart. All right, so right now this is showing SPX at 4450, 4451. All right, so it's right around this level, trying to hold the 4450 level. All right, Porter, you're welcome. Take one last look at NASDAQ and then we'll wrap it up for the day. All right, still the 370 level. Holding as support. That's the QQQ 370 level. All right, my time is up. I want to thank everyone for watching. This was a very interesting day. Anticipated. This is the anticipated action that I have talked about all week. The call gamma unwind and helped by the addition of the call delta last night. So again, all these calls expiring and this call gamma unwind both in stocks and the indexes. Again, I've been talking about it all week and it's taking place today. So again, remember, I will be out on Monday and Tuesday next week. I will be back Wednesday for the FOMC announcement at 2 p.m. Eastern time. So again, thank you very much for watching. Thanks for your questions and comments. Have a great weekend, everyone, and I will see you next Wednesday. Thanks. Bye.